Hello, hello, hello. Welcome to another ES Futures Trading stream. It is Tuesday, May 16, 12:33 p.m. Uh, we were talking in the morning about biases, how they can be, how they cause tremendous amount of damage because it get in the way of what we need to do in trading, which is to get in sync with the market. Um, do I have bias to the downside with these three lows here, the lack of excess here, the big gap here, the weakness in the lower side, the non-excess down here, another non-excess all the way down to weakness all over the place. And at the same time, you have this range 1, 2, 3, 4, 5, 6, 7 day range, and today's market inside an inside bar. Now this is um, balance inside balance. But what the market is doing? It's doing nothing here. We got good volume here. We have good volume. Notice, notice the heights here. Double high, high, high. Very close to each other. You have 1, 2, 3, 4, 5 highs. What do we have about these highs? Tremendous amount of stops here. Looks like a long liquidation. It is not, right? Because you got, well, it liquidated the loans from the opening when the markets take, took care of the overnight short, 100% short inventory. Markets, I mean, traders got emotional and then just liquidated the longs here. And now it's trading sideways. Uh, Again, very close, this level very close to this one. F from hardback, G inside bar, inside bar, inside and inside bar. I mean, boy, uh, being short here would be like being, it's kind of like suicidal. Extremely high risk trade being short. And being long because the the trade here, very short term trade, could be taking these highs out. Value, notice how value is overlapping to lower. Yesterday was overlapping higher, but very distinctive over value. It was overlapping almost higher, or kind of like a good amount of the day, since it is differentiated from since it differentiated, it moved higher, it was moving higher, higher, higher. This one is just overlapping, kind of like around the center. Halfback is also POC. Um, not, nothing that definitive here. Volume is higher, but that would be a very useful piece of information if the market was having any directional move. It is not having any kind of directional move. Ups, these marks on the high volume, very, I mean, here stop right at this high volume mark. Once, twice here, inside bar, outside bar, inside bar, inside bar. Notice how these highs are very close to each other. Oh, this is a horrendous day. Nothing distinctive here, horrendous histograms. Even this one is look at this, man, volume here. Ah, boy, so horrendous day. And this is today, right? This is today. High volume here. I have this ones marked if when the market was going lower. You know, I had this mark. He couldn't take this area, not this one, not this one, much less this non-excess low here, which is a triple low. Instead of having downside continuation, the market just make a weak high here, and it gets weaker and weaker and weaker. There's nothing here. I did a trade to the downside, a couple of trades actually to the downside. I'm red. I got a small loss there. But I am red. And there is nothing. There's nothing here. Why I can't see nothing? And it's very frustrating. This kind of markets can be very frustrating. Uh, um, when it's being bought every single time, it's being bought. Buy the dips. Kind of like the same kind of trading activity that happened a couple of years ago. Buy the dips, buy the dips, buy the dips, buy the dips. It's very weak. But the difference between this year buy the dips, the strategy, versus the one previous years ago, is that the market is going nowhere. We are not having a directional move to the upside. We have seen that the last 13 months, this market has gone nowhere. So there is a lot of accumulation there, in those huge range, 13-month range. Notice what's going in the other markets as well. Let's have a look at what's happening in the other markets, okay? Oh, look at that. Before, wait, let's see. Wait a minute. All these lows, all these highs have been taken now. Yeah. Where the market is coming from? This is not relevant anymore because it has been traded multiple times, one, two, three, four, five, six, 7 times. But this though is weak because it's too close to F low, which is halfback. Now, what I wanted to show to see is I have this market on the side. Dollar is rising. The bond market is breaking. You have these six lows here that are coming. So 1, 2, 3, 4, like this level has been taken. We have a break, but the break is not that convincing. It's very slow. It happens slow. It's happening slow, right? With hopes still the market is going to come back higher here. Now when everything is down here, they will realize, oh, we are so low now. We are trapped. Look what's happening with gold. This huge break in gold. Again, below the 2000. Gold made 1, 2, 3, 4, 5, 6, 7 highs. 7 all-time highs. Now it's heading towards this low. Uh, and a very complacent market. The thing is um, everybody could, I think that everybody will be, before the market break, everybody will be absolutely sure that nothing will happen. We're going to have a soft landing, no recession on the horizon, and everything is going to be flowers. If there's anything to the downside. This high has been taken, but how many ticks? 41, 50, 43.75. That's 200 there. 200 to the outside. These loans are still here. They have not been removed yet. Market is going to the upside now. One, two, for 3 periods, market is going to the upside. Very wide, very wide POC. Wide POC, wide POC tend to attract the market. They will act like if they were magnets. Very boring markets. Traders are absent, and traders will come back when there's a big break or when there's a huge rally. And they will appear. They will appear when the market is up here, where they will start to buy, or when the market is down here, they will start to sell. But where they were when you actually had the opportunity, right? When you had a chance. Rotational markets opening inside previous day range increases the auto chop. Also, at the same time, increases the odds of having a rotational market. We have a lot of rotation here. Back and forth, back and forth, back and forth, back and forth, back and forth. I know having this kind of lows, low here, low here, and it's just, I mean, how can I be long here, right? If having uh, this kind of lows here. I mean, the short is up here, but how you do short this market? This is an inside bar, inside day. If you short down here, you are actually shorting below POC, all right? Below POC, where the risk or when the risk have already increased. Hmm. I really, really miss my options here. Cannot place any options. Damn it. Very hard markets to trade. Man, notice how this how the market is bought from exactly this level. Their capacity to adjust, right? You saw this market going higher. Now you have to adjust. No, the high, the weakness in the high is there. It's not there anymore. Right? I don't believe it has been completed, but the market has to look into the downside now. Once the market re-enters this range, bunch of these stops are out already. Now we can go we can sell. How weak that low is, man. I want it is will be crazy if this comes out of this range again, leaving this low here. You got one weak level here, another weak level here, and the whole thing. God, how crazy this is. You know, values overlapping to lower. I want to be long? No, no, I don't want to be long. That's the last thing I want to be. The market come all the way up to here. I won't be long. No, sir, I won't. The market can rally to 5,000 right now, but I won't be long now. But never say never, right? You have to adjust. Okay. Mm. How do you trade this kind of markets? You need to have a strategy. Could have been, right? Once the market takes this stops out and there is no upside continuation here. Notice how well this has been sold, kind of like from hard back, right? Overnight hard back here. It doesn't get out. Getting out of the range is also getting out of value on yesterday's value. Um, Re-enters could be maybe. This would be very speculative, very speculative because this market is going higher. The trend is to the downside, right? Value is lower. Market is going to the upside now. Has not ended. Yeah, it's still going to the upside in the intraday. Value is lower, which means the trend is to the downside. The trade is to the downside. Could have been somewhere in here, right? But the stop would have been up here, you know, either at the high or a couple ticks below the high, because getting too close here is just upside continuation. It's too risky doing it. So, but that how much that would be like 200s, 200s stop here, 200 or 300 stop here. Uh, you have to evaluate if it is worth the risk. Gold is having a big break from 2020 to 1990. Now you can see the liquidation on gold there. Bonds have breaking have the 10 has break the trend line, the 30 has break support. Crude is forming another range. Hmm. The things with uh, when you hear when I attend Jim's webinar webinars, you got this information, right? I mean, where else I can hear something or somebody that has been 50 years in the market talking about what happened, right? The same way as I can say, for example, okay, I have seen this happening. I have seen yesterday doing something like this, right? I have a counteraction to Bernardo Mentoria and then the market rally. No counteraction to Bernardo inventory and then trades. I have seen this, but it takes 2 days. It just took 2 days. But those big things, big events, big cycles, between recessions or even I don't know, geopolitical events or whatever, um, that may take longer time, longer than years even, right? Um, he can give you another perspective just because of the experience. And listening to him, it's art. It can add or it can add your, um, how it is, can give you, and maybe if you don't go through, or we haven't went through those kind of events, listening to somebody who has gone through those things can help. Um, what I'm talking here is when he talk about the divergence, right? The divergence between the indexes. We have the ES here, for example, right? Nasdaq. Is that what he said? That's what he mentioned, right? This is the ES, the current contract. Now in range, big range, 27 days, 27, more than 30 days range here. It is the years. This is different contracts. This is the next one that come after June, and this is the end of the year. And then you have Nasdaq. There is no range in Nasdaq. The Nasdaq is breaking out to the upside. Notice the moving average as well. They have reversed. This is the down, going to the downside in between ranges, in between moving averages. This is the Russell. The Russell is even worse, right? Russell is below the 200, right? Below the 200, below the 100, below the 50. Then this is the VIX. And that perspective, uh, to have that perspective, to have that information, I will need to go through those years. From here down the road, 10, 20, 30, 40 years down the road, I will have that perspective. Right? So it's impossible to know that. I mean, not now. So that's why he's useful. I have made, for example, the personal decision to see or the market updates that Jim has over the weekend until the week is over, right? Because what I have noticed, and this is just personal, and that's why this is very personal. This journey is very personal. We all see the same kind of information, but we all trade under different circumstances. What I do, or what I notice is that it was getting in the way. It was giving me another bias. I have my own bias, and then I have different ones on top of that from another person. Another, it's a very knowledge person, but biases anyway. So what I have decided, I do my own market update, a weekly update for the week, and then after the week has ended, or after we will go through the week, I watch his on Friday night, or next Saturday or Sunday. By the time I have another one, so what I do is I compare, right? Because there won't be a way for me to improve if I keep. If I can you see the counterintuitive evenness on these things, right? If I want to get better, I need to get rid of that. But at the same time, this is what there is here's a very valuable uh, source of information of educational for educational purposes as well. But we go through these stages, uh, you know, in it is very personal. It is a very personal journey. What you go through could be different than I go through. There's a lot of trading around. I mean, this it's like pullback low is. I mean, notice. God damn. I'm going to let it go because what I have here is half back now. This is a weak level now. I can let this one go, even this one go, but I am keeping this because this is high volume here. High volume here, it like, the thing is, and this is it, right? Big prints here, big prints here as well. And the thing is, you can, okay, if you have this power, the buying power here, you can buy ones here. You can buy ones. You can buy a bunch of ones, and the market will never go through this. Same goes in here as well. If I want people to see what I am doing, I question. I question these things. Because the same thing that happened here could have happened in here as well. But you can see there's no big volumes here, big volume blocks here. Here you have a bunch of 100s, 150s, a bunch of 150s, but nothing here. The same amount of orders, 2,000 contracts. If these ones are 150s, for example, this could be maybe 6 or 12 executions here. It could have been 2,000 executions here, one at a time. Ta, 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 ta. Okay? But if I want people to see, because if I can see it, everyone can see this as well. If I want to see somebody to see this, then I question why would somebody that want to be long, for example, would let me see his position, for example, right? And that's why market generated information is very useful. Just focus on what the market is doing here. Another level of weakness. Look at this. If value, man, but this is just almost inside value here. And the most of values inside POC. Notice where POC here. POC is. Well, a couple of ticks from yesterday's POC. If this market has upside extension, let's just assume because this high is weak. Let's see the market takes overnight high and has extension all the way up to here. This POC comes all the way up to here. This POC will move up to here to this level. Where the opening is, for example, right? Halfback also will move up here. POC can be anywhere in here, from here to here. Can you see how even this profile is? If this market comes a little bit lower here, just one tick lower, now one tick lower, this POC will move higher than yesterday, up here. Can you see how you are using your imagination here? Now, look at the volume here. I got this mark, the first mark. Thanks here. Around accumulation around this area here. Huge volume here. What do I do with that information? Yeah, this is a very boring market. especially because I can see this volume. How much is now? It's decreasing though. The volume is decreasing. Maybe 15. Let me check. Oh boy, it's 8%. At the opening was 19%. Okay, here was 19%, 20. Next one, 17, about the same. And now we have 10 or less than 10. So its volume is decreasing here. But nothing to do really. I mean, one tick lower here. One tick lower, uh, um, this will move higher. If H keeps going lower, POC will keep moving lower as well. Will it? Yeah, it will keep moving lower. Mhm. Can you see what happened with POC? POC is higher now, right? What does that mean? Now it's moving lower. If H moves all the way down to here, POC will come back, will be at the center again. At the center of the day, at the center of the profile. Very, very hard markets to trade. Rotational markets here. The market is still going to the upside. I'm not going to trade thinking of what the market will do. Oh, the market will go lower. It's going to move POC low. But right now I am at the center, high at the center. I can see a weakness in the lower side. But where do I place my stop? Okay. Where? Okay, location is something important to consider also. Where my stop is going to be, where my exit is going to be, what needs to happen to keep my trade, what the market uh, what the market will need to do to prove me that I am wrong. All of those things I have to consider before pressing a trade. All right, it is 1:10 in the afternoon, 1:10 p.m. almost. If there's any question, please let me know. Otherwise, I will call it a day and wish you guys a wonderful rest of the day or the afternoon. Have a wonderful day. Stay safe out there. Bye bye.